Good morning, everybody. Yeah, no, it's really exciting that we truly are in the implementation phase of the Recovery and Resilience Facility, 1 year after its inception and proposal. I mean, just to update you, the Commission has received 24 recovery and resilience plans in total. We have given our proposal or approval for 16 of these plans. Two of those came today, Cyprus and Croatia. As you mentioned, we expect 12 of those plans, including Greece's, to be approved by the Council on the 13th of July. And it is possible that the Council will adopt some additional plans by the end of July. Now, what this means is that once the Council has signed off, and some legal formalities are completed, the Commission will be in a position to pay the 13% or make the transfer for the 13% pre-allocation of funds to the member states, hopefully by the end of July. And we will be able to do that because the Commission is already active on financial markets to raise the necessary funds. There have been 2 bond issuances already. We've raised 35 billion euros to date. There will be further issuances still in July. So the actual prepayments of 13%, which for Greece would amount to 4 billion euros, this is on track to be paid by the end of July, which is very, very good news. Now, as regards the facility itself, it is really a unique opportunity for Greece, but also for Europe. I mean, the alternate minister mentioned the fact that the issuance of safe assets by the European Commission is a major departure. I would just like to underline 2 other features of the facility which really are unique. The first is that it really is a combination of reforms and investment. Very often in the semester, but also sometimes during the financial assistance programs, the focus was very much on reforms, but lacking the financial resources to implement and back that up through higher investment. So it's a combination of reforms and investment. The second unique feature is that it's a performance-based instrument. So the additional funding will be paid out once member states have completed milestones and targets, so completed key stepping stones in the implementation of reforms and investments. Now, this is very, very different from what many people are used to in the structural funds when the Commission reimburses member states once they provide us with the documentation on the costs they have incurred. It's really about performance and delivery. And this potentially could be much lighter, could be more efficient in terms of really pushing forward with reform agendas, and again, combining reforms with the necessary investments. If you allow me a couple of words on the Greek plan, and just to underline, first of all, congratulations to the Greek authorities on the plan. It really is a huge plan. In total, Greece stands to benefit from grants and loans of just over 30 billion euros, more than 15 percentage points of GDP. Used properly, this can be, resources of this scale can be absolutely transformational. Now, just a couple of elements about the plan that I think are particularly strong and which were appreciated by the Commission and I think also the member states. The first is the fact that it's a very, very comprehensive plan and it's really well anchored in a well thought out growth strategy. So it's based, of course, on the report of Professor Pissarides, 67 reforms, 108 investments. But I think fundamentally, we very much agree with the diagnosis on which what are the key structural challenges facing Greece, the need to close the investment gap mentioned by the alternate minister, the need to change the growth model or move the growth model towards more export-led growth. I think fundamentally we agree with the strategy on which it is based. The second key element on the climate change and the digital transition, I'm not going to go into detail, but I think when you look at the reforms, when you look at the investments in there, it's clear that this can make a decisive shift in Greece towards for example, in shifting towards the share of renewable in the energy mix, something where Greece clearly has a comparative advantage in some areas. And also in terms of the digital transition, in terms of the digital transition, where Greece does score badly when it comes to the digital scoreboard index, but a very, very well thought out strategy, which is not only based upon investments in high-speed networks, but is also really backed up with critical measures to digitize the public administration, and also a focus upon digital skills and digital literacy. And that, I think, will stand Greece well. One of the most promising, interesting, maybe even exciting elements of the plan is the focus on business investment. Now here, the entire loan facility, so 12.7 billion euros, will be used to co-finance and support on lending to the corporate sector, which has been a major bottleneck or holding back growth considerably. I think there really is a lot of interest in this scheme. What's proposed is unique. We do think it can be helpful given the challenges facing Greece. I think this is something that really is something to pay close attention to. Maybe just a final point is on governance. The actual drafting of the plan has been extremely smooth. But what's very, very encouraging is that we welcome that there is a strong governance framework set up for the implementation phase, which will be key around the coordination agency. I think this it's going to be critical on a plan of this scale, that there's leadership from the top, there's an ability to address implementation problems quickly when they arise, and also to as I say, to prioritize and ensure that ministries and all aspects of the government work together. So thank you very much.